Okay, let's dive right into this. Welcome everyone to a survival guide of a slightly different kind. If you're looking at buying a home up in the last frontier, you probably already know that Alaska is a place of absolute extremes. And trust me, that includes its real estate market. So this explainer is going to be your ultimate guide to using the Alaska Mortgage Calculator. We're going to see exactly why plugging in your numbers and mapping out your financial strategy before you ever even think about bidding on a property is the single most important step you can take to secure your financial future.
You know, a financial planning expert once hit the nail on the head when they said that the whole goal of financial planning isn't just to pinch pennies, it's to create a roadmap. And that is so true. Buying a home up there, whether it's a busy house right in Anchorage or a totally off-grid cabin in the woods, it requires a solid map. Think of your budget as your expedition map and the mortgage calculator as your compass. Because before you trek out into the wilderness of property buying, you really need to know exactly how much weight you can carry in your pack, right? Calculating everything accurately in advance is what actually allows you to live that unique Alaskan lifestyle you're after without completely sacrificing your long-term stability.
So here is the fiscal roadmap we're charting today. We'll kick things off by navigating the last frontier, then we'll uncover how to avoid hidden housing costs. Next, we'll get hands-on with using the mortgage calculator, followed by comparing your loan options, and finally, mapping your financial future. Let's hit the trail.
Okay, Section 1. Navigating the last frontier and understanding Alaska's real estate market. Let's take a quick look at the wild and honestly wildly different housing markets spread all across the state.
Just let this number sink in for a second. $86,600. That is the average property value in the super remote Yukon-Koyukuk census area. I mean, it perfectly illustrates the extreme regional variations we're talking about in Alaska. Location is literally everything here. If you're looking out in a geographic area that's super far from the cities, homes might cost significantly less up front, though, they might require a lot more specialized care and maintenance in the long run. But that affordable remote market, that's really only one side of the coin. Because when you contrast those affordable, remote areas with something like the Anchorage municipality, it is a whole different ballgame. In the big cities, you are facing incredibly high buyer competition, which drives prices up fast. And on top of that, Anchorage carries an average property tax rate of 1.17%. Economic growth, which is heavily driven by tourism and energy jobs, just massively impacts housing demand there. When inventory is low, buyers end up paying a premium. This incredible contrast perfectly sets up the absolute necessity of our financial compass. You literally cannot use a one-size-fits-all assumption when it comes to Alaska.
Moving right along to Section 2, avoiding hidden housing costs, going well beyond just basic principal and interest. This right here is exactly where unprepared buyers get caught in a financial trap.
So I really want you to ask yourself a question. Be honest. When you picture your monthly mortgage payment, what's missing from your estimate? Most of us immediately think of the loan amount, the principal, and the interest rate, right? But looking only at those two numbers is a massive mistake. It simply doesn't show the whole picture of what you're actually going to be on the hook for every single month. The absolutely crucial point here is making sure you account for these easily ignored hidden costs before you make a purchase. First up, property taxes, which, as we just saw with Anchorage, vary wildly depending on your region. Next is homeowners insurance. In Alaska, you absolutely must account for extreme weather risks, or, the occasional moose wandering right through your fence. Then there's private mortgage insurance, or PMI, which you're typically required to pay if you put down less than 20% on your home. And finally, don't forget homeowners association or HOA fees if you're buying into certain communities. If you leave these out of your calculations, a house might seem incredibly affordable, when in reality, it's going to stretch your budget way past the breaking point.
Which brings us to Section 3, using the mortgage calculator. This is your financial compass, the ultimate digital tool to safely navigate all those hidden costs we just talked about.
Honestly, using an Alaska home loan calculator takes all the complex, scary math and makes it instantly manageable. Here's exactly how easy it is to get some real clarity. Step 1, just gather your latest financial papers, like your income and debts, so you know your true debt-to-income ratio. Step 2, input the home price for the specific Alaskan town you're targeting. Step 3, enter your down payment amount to see its immediate effect on your loan. And Step 4, choose your loan term and interest rate. The beauty of this is that by tweaking these inputs, like, say, testing out what happens if you wait and save up a slightly larger down payment, you get instant feedback to compare different game plans super quickly.
And hey, quick aside here, I do want to point out that the best digital tools out there prioritize accessibility. For example, local platforms like Mortgage Brokers of Alaska utilize the UserWay Accessibility widget. This ensures that their web design is fully compliant, meaning financial planning is barrier-free and accessible to everyone, regardless of their individual needs. Because let's face it, every single buyer deserves the ability to easily chart their course.
All right, Section 4, comparing your loan options, or finding the right path. The cool thing is our digital compass doesn't just show us one single route. It actually helps us test out entirely different lending paths before we commit to anything.
Let's break down the expectation versus reality of some different loan structures. A conventional loan, for instance, typically requires anywhere from 3 to 20% down, and it's generally best for buyers with strong credit who want to avoid those extra insurance costs. But if you're a first-time buyer, an FHA loan might be a much better path for you, requiring only 3.5% down. If you're a military veteran, the VA loan offers an absolutely incredible 0% down option. And finally, there's the ARM, or adjustable rate mortgage, usually requiring 5 to 10% down, which is often favored by short-term owners. Taking the time to run your specific numbers through each of these exact scenarios with your calculator is exactly how you find the perfect fit for your personal savings goals.
And we have to talk about the long-term difference in rate stability. A fixed-rate mortgage is going to keep your interest rate exactly the same forever, which means highly consistent payments and super predictable budgeting. On the flip side, the adjustable rate mortgage, or ARM, starts out with an attractively low rate, but it is a bit of an initial gamble because that rate is eventually going to change based on market conditions. By running both of these scenarios through an estimator, you can clearly stress test your budget to see if you could actually survive a future rate increase on an ARM.
And listen, even if you already own a home, the calculator is still your absolute best friend when it comes to refinancing. An Alaska Refinance Calculator helps you map out a very specific, crucial metric, the break-even time. Look at it this way. If you reduce your rate by 0.75%, you might save $250 a month. But factoring in closing fees, it'll take you 18 months of those savings just to break even. Now, what if you shorten your loan term with a smaller rate drop of 0.25%? That might save you $150 monthly, taking 24 months to break even. Running these numbers proves mathematically whether refinancing is actually a smart move for you right now, rather than just guessing.
Which brings us to our final stop today, Section 5, mapping your financial future by understanding the amortization schedule. If the calculator gives you a quick snapshot, the amortization schedule tells the whole epic story of your loan's lifespan.
Now, I know an amortization schedule can look a little intimidating at first glance, but it's really just a table of your mortgage payments over time. You really only need to focus on 4 key columns to completely demystify where your hard-earned money is actually going. The payment number just tracks your progress through the years. The interest paid is exactly what it sounds like, the cost of borrowing the bank's money for that specific month. The principal page shows how much of your actual underlying debt you're finally wiping out, and the remaining balance just shows what you still owe on the house.
Okay, so here is the absolutely crucial point in all of this, the exact moment you are hunting for in that schedule. We call it the tipping point. In the beginning of your loan, the vast majority of your monthly payment is basically going straight to the bank as interest. But as the years roll by and you slowly chip away at that balance, the math shifts. The tipping point is that incredibly exciting moment when your monthly payment finally starts contributing more toward paying down your actual principal than paying off the interest. This is it. This is the exact moment you truly accelerate your personal wealth and start building equity faster than you're servicing your debt. And using the calculator lets you see exactly what year and month that victory is going to happen for you.
While we've covered a ton of ground in this explainer today, all the way from the remote, frozen expanses of the Yukon-Koyukuk down to the super competitive streets of Anchorage, we've uncovered those sneaky hidden costs and mapped out entire loan lifespans. So I want to leave you with this final, provocative thought. How does your chosen Alaskan lifestyle actually align with your calculated budget? Please don't leave this to guesswork. I highly encourage you to consult with local experts like Northrum Bank or Alaska USA Federal Credit Union and use an Alaskan mortgage calculator to run your own numbers today. Make sure your finances are completely in order before you make that purchase so you can confidently claim your piece of the last frontier. Thanks so much for joining me today, and hey, happy calculating!